This is Justin Amazon on Friday, September 14th, 2018. And pre-market today actually gapped up and sold back down, looking like we'll open right about 1990. And that's good because we're above all of this from yesterday. Hopefully it's a continuation higher. This is really an S curve, a breakout, S curve back to 1990 and a bounce. And then we'll look to move higher up to 2005 and maybe even above that. That's kind of what this is setting up to do. So the very first candle kind of says, well, maybe not yet. We actually come right back down into the lows of yesterday and look like we're bouncing. So again, you could set this up with a bullish trade. It's about probably about a $10 range. The next candle is inside candle, and the next candle is yet another inside candle. I think these highs are really close to each other. Yeah, 4 cents apart from each other. So this is like, okay, this is nice little stair step, consolidation. You want it to break higher for it to continue on up. But also if it's going to break down, this is a great bullish candle to have. People trapped. You're below 1990. So this is really a bracket trade with a range of like a $6 range on the setup, maybe getting below 1985 and getting above 1982. So maybe $7, something like that. So 85 minus 7 is down to 1970 or 1971. But I mean, you're going to look for a move past 1972 here. If it goes bearish and then a break out to move higher, you're going to be just under 2R up at 2005. So the next candle actually breaks down. Actually goes down, moves pretty quickly, almost all the way down. Yep, right down to 1971. So that would have been a 2-hour trade using the stock, and we can look at options, see what that would have done. Now it starts to bounce here, and it bounces on this candle right back up. Oh, no, not that one. Sorry, that one. This candle comes right back up to the pivot, the low of the day from yesterday, retests, and then proceeds to roll over. And this would have been a great place to say, hey, maybe we'll come back into this level, this level, this level. That's kind of the three places. You could get in with half here, a quarter here, with a stop, here or something, thinking that it, won't continue up that high with a nice breakdown here, or even a stop here, and then, half here, and then your stop is above this one. So there's a number of different ways to play this kind of a pullback. And so that's the rollover point, and it rolls right back down into our 1972.50 price. Bounces again here, but just kind of goes sideways. Sorry, I went too far there. Right here, it's a nice consolidation, nice triangle being formed, looking like it's trying to do a double bottom here, or like a triple bottom, but it's just has the bearish slant to it. Breaks down, retests 1972.50 from below. It actually got up to 1972.66 and then proceeds to roll over some more. A little bit more down to 1960-ish. There you go. So all day this was, pretty strongly bearish with, this consolidation here. Well, first of all, breakdown staying below 1990, then this consolidation breaking down, and then even a retest into yesterday's low of the day, and then a rollover. And so, had you missed this breakdown, you could have gotten in here, or you could have gotten in here for a continuation lower. I think we got a little ways to go yet in the day. We're just kind of grinding, coming right back up, 1972.30, almost back up to 1972.50, and then just go sideways. So if we're just looking at today now, let's go look at this consolidation here and see what you could have done with this candle at 8:45 on the put. So 8:45 on the put was this candle. Let's say you were able to get in maybe at 350. 390 is the high. Hopefully you got in, above these candles here. That would have been maybe 275, something like that. So 275 by maybe 150 or 275 by maybe 160, something like that. So that would have been a little more than $100 risk, but that would have worked nicely. Would have ran up, from let me say 275 to 775. I mean, that's a really nice gain. Nice 5-hour gain right there. Had you gotten out here. So what indication we have on this candle at 910 to get out? 910 is, oh yeah, that's when it hit the 1972.50 price that we've had on the chart for a while. So that would have been a great place to exit before it retested this. This is where we retested that yesterday's low of the day. So this candle is 935. We come back over here to the put. At 935, we had an indecision candle with a high of 290 and a low of 228. So that would have been a place that you could have been getting in maybe at 250 again, with the stop down at 150. And then that would have kind of grinded up, would have been profitable. It came back down, and this would have been yet another entry. So this candle here at 1030, nice time for things to reverse. 1030 is this candle. So it's making indecision, nice small candle, looking like it's breaking out, and then it rolls over again before it breaks down. So, this is another good place to get in bearish, either on that candle or on the next one. Had you gotten in on the next candle, that made it up to 375 to 4. So maybe you got in at 4 with a stop down at 250. That would have been a little bit more than $100 risk. Or because that would have been the candle to get in on, maybe you just kind of waited and say, okay, well, I actually wanted to be pull back a little bit more. So if you're working $100, our low here is 272. Let's call it 250. We want to get in at 350. This candle fills at 350. Fills at 350 by 250, and you would have been all set to get into this move, which probably would have taken some profit here, about 750. It was not earlier, but holding on to some more. This ran from 350 all the way up to 1450. That's 11-hour gain in the course of, what's that, 1050 to, so a little less than an hour and a half to do that kind of a move, just because this just kept selling off today. It just moved bearishly pretty consistently. We had a little bit of squeeze forming here, looking like, okay, maybe it'll roll over again, but we've already just sold off so far. This is the kind of thing you want to look for. Okay, well, what's a bullish move? Well, we got a bullish move breaking out. This is the retest, the S-curve, and then here we go. So if you're looking at, okay, you know how this is going to move. It's going to, throw a bunch of premium into the calls and then just suck it right back out, and then it'll just have to move with where the market's moving on Amazon, because this is so close to the end of the day. So let's just say back here, somewhere in here, because this is an S-curve, we're recognizing that it went higher, pull back a little bit. Let's say in here we get in bullish with, let's see, we'll probably need to do the 1970 call. So I had 1975 ready for the 1970, because that gets almost in the money. But it's always guesswork unless you have the rules defining which one you want to use exactly. Oops, I gotta check my time on this. So let's say anywhere from 130 to 145 is the time frame we're looking at. So there we go. So 130 to 145. The high here is 125 and 35. So all through this, you've got a high around 125 and a low around like 50. So, you can easily do a $100 risk. The question is it really going to move back into the money? Is it going to bring it back to a previous pivot? It doesn't make up to a previous pivot. It does sort of go through these, but this is one that we would have just had to have set up to get out. And you would have made a little more than an hour probably. So the other option would be to go a little closer in the money. So let's look at 65. See that move? See, now we got a little more range on this. A little low here, 216. So some of these candles here, these here, all of it signaling, or all of it just tracking, and then just knowing how this can trade towards the end of the day, where you have a little bit of recovery, this could have been ridden up, I should say, not written up, ridden up. Take the ride higher. The low here is 269, 270. And then the high is 350. So maybe you got in 350 by 250, something like that again. And that ran up to 650. That would have been 3R nicely. Just by tracking with, this kind of recovery this quickly, and got into the money a little bit more, going with the 1965. That was what we just did, right? Yeah, 1965. So got in the money quite a ways towards the end of the day, which is always nice. But this was probably very, very spready. So you may not have waited for 3R. You may have just had a target set for 2R, especially if there's no clear point. This was a pivot, but not really clearly identifiable with where we could get to with a 2R risk, or I'm sorry, with a 1R risk and a 2R gain. I'm not sure we would have planned for this target getting hit just like it actually did. So anyway, I hope this helps mapping these options today on a Friday, expiration Friday with Amazon. And we'll be back next week to see what we do, looking at the bigger picture. Again, if we gap up, we're gone. If we pull back a little bit more, I don't want to see this 1925 taken out with a close. If that closes below, the only last contender would be the low of this this candle. And we could be in for some lower highs from there. But I don't even want to speculate that too much, because this is such a strong candle. It's just pausing. This is exactly what's needing to happen here to get ready to make a bigger move. That's what all of our consolidations have been. So hope this helps. This is Justin, Amazon.